Hello and welcome. You are listening to the Investor Lab, the auditory epicenter for passionate people seeking a life of freedom, choice, and abundance. And on today's show, we dig into an investor story with Dan and Jean Ross, two investors who are both seeking a life of freedom, choice, and abundance, and in fact are doing it. What I love about this episode is not only do we get to hear and share the story of a couple of people that are on that path, but also we actually really dig into how they're thinking about investing in an environment where interest rates are going up, how getting, really great results in their property portfolio has transformed the way they're thinking about their future, and what that kind of journey to this point has looked like and how they've gotten there, and also where they're going and what their goals are. And the reason I like this is because it's so real and so tangible and so easy for other people to grasp. And so if you are thinking about investing, but you're just not sure, or maybe you've started investing, but you're like uncertain in the current environment, all of this kind of stuff, it's really helpful to hear from some people who are walking the path, regardless of what is going on in the macro environment, or actually understanding what is going on in the macro environment. So I think you're going to get a lot of joy out of this episode. I personally really loved it. Dan and Jim are great guests and just such good energy and such good people. So I really enjoyed this, and I know you will too. So without any further ado, let's get stuck right into it. I can't wait to share this with you, and I'll see you on the inside. Hey guys, welcome back to the Investor Lab. Joining me on today's show is Dan and Jean Ross. Dan and Jean Ross have been working with Dashlot to build their property portfolio, but I am excited to actually get to know way more than just that and really get to know them and actually dig into a little bit of their story. Dan, Jean, how are you?
Good.
Good, thanks, Gus.
How are you?
I am effervescent. I'm caffeinated. We've been having a good chat. Feeling in good spirit. So obviously know a bit about you guys. You've been working with the team for a while. I've heard loads of great stories. We've obviously had just a bit of a chat before we've come online just now. But for the benefit of everybody else listening, why don't we kind of like paint the picture? Who are you guys? What do you do? Where do you live? How do you give us a bit of a backstory? Paint a bit of a picture for what your life looks like.
Yeah, I'm Jean. I'm 33. I'm a Novocastrian originally. I'm from Newcastle. This is Dan. Dan's 44. He's born and raised, coasty dude.
You said that in such a bit of sass. He's 44. It's like,
44. Yeah. Younger woman and all that. Lucky Dan. Uh-huh.
Yeah.
And we've got a 5-year-old son, Bo. And I guess the way we met, I left Newcastle when I was 19, moved to Sydney for 8 years to work in advertising and account management. And Dan was doing his sales thing, still living on the coast. We actually met on Tinder, believe it or not. He didn't want me to say it, but I'll say it because it's true.
Yeah, why not? There's nothing wrong with that. That's all good.
No, well, it's normal these days, but 8 years ago it was probably a bit like, but so we met on Tinder, and after about a year or so, I had enough of Sydney anyway, so packed my bags and moved up here, moved in with him, and I guess as they say, the rest is kind of history.
Yeah, nice. Okay, so how long ago did you guys meet? Did you say 8 years ago?
Yeah.
8 years ago. Yeah.
8 years ago. And not that age differences matter, but there's an 11-year age gap. And as you get older, the age gap matters less. But 8 years ago, that would have been significant. So there was probably a couple of little quirky things there. Met on Tinder, a bit of an age gap and stuff like that. Did you guys know instantly that this was this was it, or did you guys had to navigate that yourselves, or that's quite interesting, I think.
I think so. I liked him immediately.
Massively, yeah. There's definitely a lot of chemistry there, and we connected very quickly, and pretty much caught up again the next night. And then when was it? A couple of months, 6 months later, she was packing her bags to live on the Central Coast.
Yeah,
nice.
I think I forced him to tell him he loved me, and then I moved in the next weekend.
That's the way to do it. Honey trap. It's a honey trap. Okay, so Dan, you were 36 back then, right? What?
Correct.
Yeah. So what was? I'm interested because I'm 36 right now as we record this. I think I can always forget. You know how when you get past 30, you can forget what your age is.
It's all downhill from here, guys. No, just kidding.
No, totally. So I'm interested in unpacking a little bit what your life was like. And Jim, don't worry, we'll talk about you in a second as well. But I'm interested in unpacking what your life was like up to 36, right? Because I don't want to put words in your mouth, but 36, you found the love of your life. You've been picked up from that. You've been doing sales and stuff like that. But what happened in that period up to 36 before you started getting your, life together? You found found your love and all of that kind of stuff. What happened up to that point?
Okay, so basically I've grown up on the Central Coast, pretty much lived here all my life since I was 2. Our family moved up from Sydney. I've got 2 brothers. I've pretty much been a surfer my whole life since I was 5 years of age. So, growing up on the coast, we love the beach, we love to surf and all that kind of stuff. In regards to work, like I've always worked in sales pretty much for the last 15 to 20 years. A lot of traveling in between. So I've kind of lived that, that independent life, been brought up well from my family. So basically, living on the Central Coast has been, created the person I am, who I am today as a person. And
was your family ever into like property and building wealth and stuff like that? Was that ever part of your story growing up? Like, was that a part of the family discussion around the dinner table and stuff?
Not really, Gus. So basically, when we moved up here, Dad bought a block of land, built a place in Terrigal, and it was basically just more about getting the family together, building the house. My dad had a paint business, so he worked in the paint trade at Erina, and pretty much, we lived pretty well.
What I'm interested in understanding, and this is what I'm trying to dig into, is where, because you guys have started on a bit of a wealth creation journey, right? And I'm interested to understand what the origin of that was, but maybe, Gene, was that maybe more on your side, or which one of you spearheaded this?
That's my side. So basically, Mum and Dad weren't really into that whole wealth creation thing. So I read Rich Dad Poor Dad probably when I was about 22, and that sort of instilled into me about the value of money and how money works for you. You don't have to work for money. So it got me thinking, well, how can I, apply that? And, obviously over the years, I sort of lived an independent life and basically got me to where I am now. And I've always listened to a lot of podcasts and books and whatnot. And what triggered this whole wealth creation journey was actually a friend of mine. We both invested together about 20 years ago. Okay, so we purchased a property in Wamberal. We did quite well out of it, and then we actually sold that. So my business partner at the time, he bought us out, and we moved on. It didn't end that well, as you probably know. Mates from high school owning a house together, it can get a little sort of, funny. And then G moved in, and then so we started our own journey. It was during lockdown, so we were like, what the hell do we do? So we moved out. We started renting a property in Terrigal, and during lockdown, and so I've done quite well. I've obviously, saved quite a lot of money. We've done well out of the house that we purchased, I think, in 2009. What do we do? So I had a lot of downtime to listen to a lot of podcasts and listen to a lot of successful people, and it was Grant Cardone that I actually listened to, and I'm sure you've heard of Grant Cardone.
Uncle G, man, Uncle G, he does it.
That's the one. So Uncle G. Basically I did one of his university courses. So basically it's a sales course, and I got right into it because it taught me a lot about, what I do on the road, and basically all my selling skills, what I've learned in my whole career, and just to sharpen those, while we're getting that downtime. And
Can I chime in really quickly? I think with the Grant Cardone, just before you kind of take off on that, I think once we sold our place in Wamberal, Goose, we found ourselves with quite a decent amount of money in the bank, but the properties around the area at that time had shot through the roof. So we were looking kind of initially, weren't we, to buy our own family home, but we were going and looking at these properties that were worth $1 million that were just terrible. And yes, so we just didn't have quite enough money to purchase what we wanted at that time. So I kind of felt, it was a conversation we had. What can we do with this money we have in the bank? It's just going to sit there. It's not going to make much. What can we do with it in the meantime? Sure. How can we make this money work for us? And this is when you got onto your Grant Cardone.
That's right.
And this all came on from there.
And this is where Dean's like, what are we going to, we've got this money in the bank. What are we going to do?
Yeah, so, don't leave it there. Let's make it work for us.
So with the sales side, there was also a real estate investing section in the course that I did. And I'm like, this is really interesting. So I got really deep into that. Jean you're kind of interested, but she kind of,
I'm probably more practical. I do a lot of the market research, and I'm on the realestate.com. I'm on the domain. I'm doing kind of, I'm walking around, checking out all the places that that sort of thing more in the practical sense, whereas you're more podcast, books, theoretical side of things. So
all that kind of stuff. So yes. So basically, Goose, so I listened to this real estate course and got a lot out of it. And I thought, well, how can I apply that? This is all good in America, but how can I apply all this into the Australian market?
Yeah.
Okay. So, and Grant talked about rent vesting, and I thought, well, that's a great idea because we're actually rent vesting at the moment. So how can I apply that? And I was just browsing one night on social media, and Dashdot popped up. So I'm like, that seems really interesting. So I actually listened to your webinar, your 45-minute presentation, and I was like blown away. And I'm thinking, this is very relative to what Grant Cardone talks about. And I got really excited, and I booked in a discovery meeting with Natalie Armstrong.
Yeah.
And the rest is history.
Awesome. Love it. That's awesome. So personally, I'm a fan of Grant Cardone. He gets it. A lot of people don't like him because he's a loud, brash kind of dude.
He's pretty full on.
He's full on. Like, he's a full on, like, loud American kind of like, but the underlying principles about the way he thinks about real estate are pretty good. And I'm quite aligned with them, actually. So I think he's got some good stuff going on there. But let's walk back a little bit, because that's kind of told me how you kind of came on that journey. But Jean, what about you? Like, because when did you start getting an interest in property? Was it kind of like, were you kind of looking at Dan going, dude, what are you even on about? Like, let's, like, at what point did you decide, okay, cool, I reckon we can make a go of this?
I've always been interested in property in the way that I probably should have been a real estate agent, because I just enjoy looking at it, seeing what it's doing, seeing what the market's doing, looking at different areas. I'm a sticky pig in that sense. But it was just the idea of, right, we've got all this money and I don't want to sit it in the bank. From everything I've read, from everything I've been told by successful people, you have to make your money work for you. Basically, sitting in the bank isn't going to do it. Daniel came to me with this idea about Dashdot, and I'm not going to lie, I was a bit apprehensive at first. I wanted to know more.
Fair enough too.
Yeah, we've got all this money. I'm not just going to go handing it over.
Yeah,
sort of a deal. But then you kind of took me through. You kind of what was it? It's like a presentation. Discovery. Thank you. So that took me through all of this, and then we ended up speaking to, I think it was Adam, and he kind of took us through everything that Dashdot does as a business. So it's not just like, give us your money, we'll buy you a house. It's everything in between, things you don't even think of, the demographics surrounding the area that you're buying the house, the infrastructure, the trend in the marketplaces, whether or not there's, government housing around, like there's every little intricacy that as a first-time investor or a first-time property buyer, you probably wouldn't think about all this stuff being around your house. And how it affects the value of the property in the time frame you have it. So based on all of this, I was convinced, more or less. I was like, okay, these guys aren't joking. They clearly know what they're on about. And we were given a few kind of successful examples, and we just decided to have a go.
Hey, interesting. So prior to that, okay, so Dan read Rich Dad Poor Dad when you were like early 20s and then started investing at 24. Did you Jean, prior to kind of like you getting roped in by Dan to go like, check out this video and like suss out these guys or whatever, prior to that, like, was there any kind of, were you really thinking about building wealth? Was that a thing for you? Were you maybe like dabbling in shit? Just had it never been part of the kind of like global narrative for you, or?
As soon as I get money, I spend it. so no. Yeah, I'm not naturally kind of an investor. I just kind of got interested. Once we sold the house, and we found ourselves in a position where, it was in our best interest to get educated about investing or what to do once you've found yourself in the position where you've all of a sudden got a bit of money, and how to kind of take that next step forward to make something, small into something big.
Nice.
Yeah.
Nice. I like it.
Yeah.
So, sorry, to cut you off there. Dan, you mentioned you invested with a friend, like a high school friend, when you bought that place originally, and you said it sort of got a bit messy and stuff. What advice? Like, because look, there's two parts to that. Because by the sound of it, doing that is what set you guys up to now start to build a scalable, profitable property portfolio. Yeah. But it sounds like it wasn't all kind of like easy. And we don't need to spend too much time there. But I'd be interested to know, on balance, do you still think it was a good idea? And secondarily, what advice, because I know a lot of young people are thinking like, oh, should I just go and buy this with a mate, or, get a couple of girlfriends together or whatever, and we'll kind of do this ourselves. What advice would you have to people who are thinking about doing that to make sure that they don't end up in a kind of a messy situation?
Yeah, sure. It's a good question. Look, I think, definitely. I don't look back. I look back on it. Yes, it was a great opportunity because it set us up for where we are now. So, it's those roadblocks and hard times that make you become successful. I think it was a good, obviously good strategy to get to where we want it to be. Now, advice for young people, I would probably suggest, because everything's just gone through the roof, and inflation and property prices and whatnot, I've been advising a lot of friends at the moment to rent vest, or if you live at home, to buy an investment property. You don't have to, buy through a buyer's agent like you guys, like Dashdot, and you don't have to worry about, physically looking at the property or buying in your own area, but just get really well educated. Read a lot of books, obviously listen to the podcasts like the Investor Lab, and just, go with your gut feeling as well. It's definitely a slow process, but I get in our local board writers club, for example, we've got a lot of young 20-year-olds, and they're all successful. They're all tradies and whatnot. And they're saving money, and they're like, well, I've got 20, 30 grand saved. What do I do with it? Yeah. They just don't know what to do. So if I can help.
And so just on that point though, like if they were thinking about getting together with another mate, right, for example, to try and do it together, like specifically in that kind of combination of things, like do you have any tips that you could give to, because I know a lot of people are thinking about it. Can you give any tips, like lessons learned about how to make it not messy? Like, would you have structured it differently? Would you have put together an agreement at the start? What would you have changed about that specific relationship?
Okay. So how it worked, how the relationship, or how the business, the investing business lasted for so long, is because I lived in the house, and Luke lived in Victoria, and he lived overseas. So I was pretty much looking after the property. When Jean moved in, that's when actually Luke was living in, I think, France at the time, America at the time, and he they moved their family in.
He didn't like it.
Yeah. So I guess it got pretty cozy because there was like three of us. We just had Bo, obviously, our 5-year-old son, and they had 2 sons as well, with national sons. So it got a bit cozy.
So they moved in. So everyone, you were all under one roof.
Yes, they moved back from America after about 10 years and just moved themselves in. So naturally, that didn't go.
How many bedrooms were in this house? Was this like a mega mansion with like 19 bedrooms? 4?
No, they were living in a 1-bedroom studio flat that was the bottom of the house, and we were living in the 3-bedroom part upstairs. So it was all very cozy for a while there. But
So I would suggest, my advice would be, don't move in together. And our broker at the time, he actually warned us. He says, guys,
this might not be the best.
This might not be the best. Peter likes to use everything as a worst case scenario, but he said, look, this always ends in tears.
Yeah.
These sort of arrangements. So
a lot of people also forget that you get half the benefit, but you get 50% of the benefit, but 100% of the liability, right? When you're setting up structures like that as well. So, but it could be a really good stepping stone. So if people want to do that, they just need to understand all of the implications and consequences and all of that kind of stuff. Structuring.
Investing with a friend probably isn't a bad idea if you invest in a property that is a rental that somebody else lives in.
Yeah.
But when you are both living in the house that you've both bought, and someone wants to sell or move out, or boyfriends or girlfriends move in, that's when the issues arise. So if you take away that personability of it and just have it solely as an investment property, then it probably might be worth it. It would probably work a lot better. Well, the outcome would be a lot better.
Totally. Totally. Yeah, definitely. Let's switch gears a little bit, right? Because you guys have started investing, and I love that you've been working with Dashdot and you're having a great experience and stuff. But I want to just make sure the focus is on your journey as well. And what I'm really interested in digging into now is, like, what are your goals? Like, why? Cool. So you've now made a decision to start investing. You're starting a bit of property portfolio. We'll dig into the properties and stuff, and we'll talk about that in a second. But, like, why are you even doing it? You had some money and you didn't want it to, go to waste or corrode with inflation and stuff like that. But what actually specifically is the outcome you're aiming for? What is the goal?
Okay, so basically, I mean, we want to. I mean, I'm 44 now. Jean's 33. We want to be able to set ourselves up so we're, I want to look at semi-retirement in the next 10 years, and we've now got a roadmap to where we want to be. And I know this is totally achievable. We want to spend more time with Bo, maybe have some more children, and just travel as well. I mean, being a surfer, I've traveled all over the world. Jean likes to travel as well. Free up some time. I mean, so many people get caught up in the rat race and the daily grind of what you're doing. And I mean, I love my job, but I want to get to the stage where, I want to build, want to have a successful portfolio of, say, 5 investment properties. We're at 2 at the moment. It was our goal to have 3 by year 1, so we've already got 2 in the first year. So we're well on our way.
Yeah. Why 5?
Well, 5. I mean, you talk about in the podcast, having 5 is a good amount to get you where you want to be.
It seemed attainable. With what we had. I think anything after 5, we've got to figure out how we're going to do that, and we will. But the number 5 kind of seemed realistic. I like to walk around saying 20, but
who knows? The sky's the limit. I mean, yeah, I know. But look, we might get to 5 and say, hey, well, that wasn't, let's go again, So
I think the idea is we wanted to kind of get enough properties behind us that we could essentially just slow right back down on working for the man, as it were, especially myself, and focus just a little more on family time and managing the properties ourselves, and the income that we receive from those is kind of the long-term goal, essentially. Stop working for a boss, be our own boss.
Nice. Yeah, it's interesting that you guys have picked up on the 5 being an interesting kind of catalyst point, right? Because of course everyone talks about 10 properties in 10 years and 100,000 cash flow and all that kind of stuff. But it's like, what is that specifically? What is that based on? Like, where did that thought process come from? And what does that makeup look like? And obviously, depending on the properties you buy, the 5 properties kind of thing, which you can do in a very short period of time, that will give you that optionality over somewhere between a 10 and 20 year kind of time frame is probably where that kind of like you'll hit your freedom number, whatever that looks like in that kind of scope generally. And then it's just a case of like, well, okay, do I want to ratchet that forward a little bit more? Do I want to try and bring that closer? And then but that's very different, right? You're playing a different game then versus like, how do I put the oxygen mask on? You're just like, okay, how do I dial that up a little bit? How do I improve that? Which is a very interesting thing. So what are you going to do once you've achieved that goal? What are you going to do with your time? You said you're going to travel, right? But you can only travel so much unless you plan on traveling just like nonstop, just hitting the road.
I'd like to be, be more of like a mentor, maybe a life coach in what I love doing, like within the surfing, or maybe be an advisor in property investing. So,
nice.
I've got some goals I want to do in the next sort of 10 to 20 years and stuff like that. Because I think, when you see a lot of people retire and they do nothing, right? So you got to do something that keeps you inspired and keeps you into the daily grind. I'm a bit advocate for health too. So I believe, looking after your body, staying healthy, exercise. So yeah, there's a lot of different things I like to do for sure.
Interesting. What about you, Jean?
I wouldn't mind flipping a couple of houses. I've always been interested in the design aspect of things, and I'd like to think I'm quite good at it. I wouldn't mind giving that a go. And aside from that, I think I might just be a real housewife of Terrigal.
Nice. That's awesome. That's awesome. I love asking people that. Yeah, I'm sure that you'll be able to for your time. I love asking people that because that's kind of where the real interesting stuff is. It's like, well, what are you going to do? And broadly speaking, it always fits into, one of 3 categories or multiple of 3 categories. Joy, love, and impact is really the 3 categories. So joy, something you do purely for the happiness that it gives you, like just for the fun of it. And flipping could be that for you, Jen. You might be like, it's not about the money. I just want to do the thing, right? And love, something that you do because you want to give or receive love. And that could be like spending more time with the family or something like that, right? It's because you want to be able to give and receive that kind of love. Or impact, something you do because you want to make a difference, which is kind of like mentoring and trying to give back and trying to share that knowledge, right? That's where the fun stuff happens, because it's like, well, okay, cool. So what can you do to create a life where you can start doing things for joy, love, and impact? And it's like, whoa, all of a sudden you've unlocked a new level of fulfillment, right? It's huge. That's awesome. Cool. So I want to ask then, right, before we get into that question, I'm going to ask an interesting question in a minute. But first, you've gone from zero properties, full stop, right? Because you sold the one that you had. So you've gone from 0 properties to 2 properties in under a year. Talk to me about those properties. Like, are you happy with them? How's the performance been? Talk to me about them. Like, what has it been different to kind of what you would have done? Give us a little snapshot on what that looks like for you guys.
Sure. So we secured our first property in October last year up in Mount Louisa in Townsville. I mean, it's just built us a solid foundation. I think we paid $350 for it. Nick actually at the time helped secure that. He was our property acquisition manager at the time. And I mean, we were in limbo. We didn't know what to expect and all that. And then, fast forward 6 months later, we've had a 15% gain and, nearly a 50% return on investment. So it's, like, wow.
It's pretty unreal. And the rent yield was amazing.
The rent yield's amazing. And with the Apex report and that, just the knowledge and data that Dashdot have is just second to none. I mean, we wouldn't have known any of this. So you're just picking up all these different pieces, even speaking with Jason, consistently, and Adam, you feel as though you're part of a family.
It's awesome.
It's awesome.
The property itself's wonderful as well. Like, it's a single level, cement rendered, 4-bedroom, 2-bathroom, family home, easy care, but really decent sized lot from what seems to be a pretty popular, like, people trying to get into the area. And it's just gone, probably made $80,000 in the past year just by sitting there doing nothing. And we're getting 7.5% rent yield on top of it or something.
Just under 7.
Yeah, something crazy like that. So it's paying itself off. It's double. It's almost doubling in price all of a sudden. It's just going gangbusters.
I can tell that you work in marketing. You're like, doubling in price, 7.5%.
Yeah, exactly. We couldn't we just it hasn't. We've been overwhelmed with how well it's done. We couldn't have expected it to be so easy and so successful straight off the bat.
Yeah, that's awesome. That's awesome. Yeah. I'm going to circle back on that in a second, but you bought a second one. You only recently settled on that second one as well, right?
Yes, just on the end of June this year.
And what's different? What is different about that one compared to the first one? Like, I know they're in different parts of the country, but talk to me about that. Like, because what have you noticed that's different about the two?
It's a lot older. Like, it's a 1970s style brick and tin property in the Quina region down in a suburb of Aurelia.
Yeah. So half an hour outside Perth City.
Half an hour outside Perth City, not far. So, I mean, great location. A lot of, I guess, it's a different demographic, but there's a lot going on there. And again, with this, I mean, Jason sent some of the hot spotting reports, and they're awesome just to get to know and understand, what's trending in the area with the infrastructure, the naval base set up. There's just so much going on, and I mean, but who would have thought, we'd purchase a property that we haven't seen in Townsville in Queensland, and then over in WA.
Never been in WA,
and we live in New South Wales, so it's unbelievable.
Yeah.
Awesome. So now I want to circle back on. I want to talk about this. I want to talk about perspective. All right. I want to talk about perspective from two specific angles. One, now that you've seen what can be done, particularly with the property in Mount Louisa, because the one in Aurelia I've only just settled on it. The one in Mount Louisa, now that you have seen the results that you can get in real estate, how has that changed your perspective around what is possible? That's one. The other piece around that is that you have bought two properties that you have never visited, in not even in the state that you live in. How has that challenged or changed your perspective around investing and properties and location and stuff?
Sure. I think it's just taking the first step that people are afraid of, and that was the big thing for me, because I just thought, we could lose. Investing anywhere is a risk, whether it's property, stocks, doesn't matter what it is, it's always going to be a risk. And it was just the apprehension of, we've got this money, what if we lose it, and when we could have put it into our own family home, what if we make the wrong decision? It's all the what ifs and the could happens and the maybes. You tend to focus on all the negative things that could happen, and we just eventually said, you know what, stuff it, let's just have a crack, let's have a go, and we'll take the first step. So just getting over that initial hurdle of taking the first step.
But were you like how did you feel buying a property that you are not visiting, can't touch?
Yeah,
interesting.
Yeah, a little bit yeah, you're really apprehensive, concerned, scared, but hey, you only live once, and look how it's worked out. You just got to trust. You got to put your trust in people.
And you got to take risks. Like, you know, successful people do take risks, and sometimes they don't always pay off. But I mean, this was
an educated risk.
This is an educated risk, yeah. And I mean, Dash sort of got an amazing track record. I mean, you look at the reviews, you definitely have a safe bet. And you know, always, as I said, always go on my gut feeling. And
we did enough research that we got to the point where we were confident enough to go ahead with it.
Yeah, because that's a big psychological barrier. Because I think, look, don't quote me on these stats. I'm normally pretty good on the numbers and the data and whatever, but like it's certainly way over 50%. It could be like 70% or whatever of investors still buy in like within driving distance of where they live, right? So it's a big psychological barrier to get over to actually change the way you think about borderless investing, and obviously it opens up those opportunities. So, anchoring back to your goals, you know, you both want to be able to effectively get more time back, be able to, you know, spend time traveling, spend time with the family, give back, become, you know, a real housewife of Terrigal. How has investing generally, but also like the perspective on the results that you've already seen so far, how has that changed or shaped that vision of the future from when you started not very long ago, not even 12 months ago? Like, how has that changed it? Like, I'd be very interested in that.
We're really starting to believe, you know, we've got this, we've got this roadmap and these goals, and I think, well, hang on, we're actually doing this.
Yeah, we can do this.
Like I was just saying to Jen the other day, we've actually got, you know, I did set a goal to have 3 properties in the first year, and already on 2, and I'm like, wow, you know,
looking into the third.
It's unbelievable. Like it really is. It's definitely so. Yeah, that self-belief is definitely the big takeout for me.
Went from being a bit of a pipe dream to hold on a sec. This is a reality. We can do this if we keep on. Like if we keep on this journey, sort of a deal. There's no reason why we can't do it.
How does that make you feel, Jane?
Pretty good, pretty empowered, pretty far ahead of the person that's sitting at home paying off their own mortgage and is going to do that for the next 30 to 40 years of their life. When you think about it like that, puts a smile on my face. Yeah.
Yeah, I think honestly that's the bit that I like most. Like, because properties are cool and all of that kind of stuff. But I mean, you've probably heard me say before, like they're just a thing, right? They're just a vehicle. But once you can connect the actions that you take with the goals that you want and realize that you're on a path to achieve that thing, all of a sudden there's something in your chest where you feel different. You're like, oh, holy smokes, I'm doing it. I'm doing the thing. This is what it looks like and this is what it feels like. It's the word you used, empowering, is like so unbelievably true. How does it make you feel, Dan?
Yeah, great. Pretty much the same. Yeah, I mean, as I said, that belief, that trust, and feel motivated and empowered, and it's such a good feeling. I think you know, the sky's the limit. You know, I mean, sorry, you clearly outlined it in your book. You know, you got the Goldilocks effect and all that stuff going on. It's, you know, there is a roadmap there. There's a plan in place, and it's proven, it's tried, it's tested, and you know.
Awesome.
Got that trust and belief that it's going to work.
Yeah.
Love it. So I want to ask you a question now about the current environment, because you guys have just bought a property. You just settled on it, right? Interest rates started going up this year, right? And you guys are on track. You guys got a goal. You're going to hit 5 properties. And I reckon based on how you're going so far, you'll probably get that in by the end of year 2 or halfway through year 3, somewhere around that. So you'll have 5 properties in 3 years, I think is probably a safe bet, right? Is an easy kind of a safe bet. So you guys are on that path, and that's what you're doing it. How do you think about investing when interest rates are going up? Like the media are saying things like, interest rates bad, property market crash, no good, wrong time, all of that kind of stuff. A lot of negativity going on there. What are you guys doing up here to be able to tackle that?
Well, again, I mean, I don't listen to the media. Don't listen to the news, because it's 99% negative. I know Gene does a bit, but for me, again, the knowledge, you know, listening, you know, talking to Jason, checking in with Adam, checking in with your broker. I mean, you know, people like Chris Raymond is a great advocate for where we're going, and just the structure of your portfolio. Like, I mean, we set up our first property on at principal and interest, and we locked it in fixed for 3 years, and then we thought, well, hang on, we can get the next one, because I didn't know. I'm thinking interest only, like, why would we go interest only? But now I'm sort of understanding why we go interest only, because we're not with the yield that we're getting in our second property. I think Adam was saying, we can, to break even, it'd be up to like 6.5–7%. So we've got they're stress tested. We've got a lot of wiggle room where we are now. So we're not really that stressed with the interest going up. And basically the entry level pricing of the property, we haven't gone out and bought $1 million property. So we've been advised within how much money we've got and what our goals are.
Yes.
What that, that 3 to sort of, or that 250 to sort of 400 mark.
We were presented with, and we bought a property where it would be, the interest rates would have to go almost up to kind of 9–10% until it started becoming a problem, which is hopefully not going to happen. And I think what future investors have really got to take into consideration is, as well as interest rates are just getting back to the point where they should have been, where they should be. We've had all these investors been having a great old time over the years, because they've been at 0.05% or something crazy like that. Now they're just getting back to where they need to be, and it's just something that I think people, property owners, investors, have to get used to, because that's where they need to be.
And I think this is the time now, because a lot of people have done well, but also too, a lot of people have overcommitted themselves. So I think definitely in the next few years now's the opportunity to buy an investment property, especially to do what we're doing. I mean, we can clearly see the roadmap ahead of us with all that knowledge. So I think, a lot of people have got to really just, carefully do their research and understand, and don't listen to the media, because in their mindset they're like, well, that was our mindset, go and buy $1 million property, and you're in all this debt, and then you've got no sort of, you've got no sort of structure, no way out, where you're just locked into that owner occupied property, and doesn't really open up the door for,
And there is a world outside of New South Wales and Victoria. But if you look outside of those states, you can find yourself some killer bargains. And these are in states and areas that are only just starting to take off. And if you get in at the right time, where we have, you're laughing, sort of a deal. Whereas you got places like Terrigal, for instance, where we live, the prices of the houses are through the roof. They're going to need to come down a little bit.
Or they need to stop going up for a while to let the rest of normalize, right? Like, so they might not come down necessarily, but it might stay the same until the market reaches up to them, right? So,
exactly.
So, a couple of questions. You guys are rent vesting right now. Any plans for that to change, or do you think you're going to keep rent vesting until you've achieved your financial goals and then revisit the home ownership thing, or are you going to rent vest forever?
Well, I think we'll just keep going until we reach our goals and see how much cash flow and money we have lying around, and then go from there. If we look at a different strategy, great. If not, we'll just keep on the path we're on.
I think, like by property 5, we can look back and say, okay, maybe we do have enough now to buy our own occupied property and draw down that equity, say, from Mount Louisa. So, I think it's definitely possible after 5 that we can really look at securing our own property. So as you said, I gave ourselves 5 years. You're saying 2 to 3. So who knows? It might be 2 to 3 years where we're looking at a property where we want to live. I mean, rent vesting's great. Also, too, I guess the only downsides are you constantly got to move, like where we're renting at the moment. The owners want to move in, so we have to be. They've given us to mid-December, so we've got 3 months to move out. So
that is a hurdle, but that's just what renting. That's just part of renting. I guess everybody rents has to deal with it.
It's upsides and downsides, right? So
totally. That's right.
Cool. So I'm interested because both of you guys said at the start of the episode that like neither of you grew up really thinking about wealth creation. You grew up in a household where that was like part of the kind of dinner table discussion, stuff like that. You've got one kid right now. Did you say Bo? Is that right? Yeah.
Yeah.
So how do you think that your experiences now are going to change the way that you think about teaching Bo and potentially future kids about like, are you going to start to integrate that kind of like wealth education a little bit earlier? Like, and I'm very interested, how do you think, like if you kind of like superimpose that back on yourself, how do you think that is going to change their story?
great question, Gus. Yeah, because my parents, for example, they didn't teach me how to do what we're doing now. And, I think my dad's like, he's retired now, but he's like, well, I wish he won't tell me, but he's like, I think I wish I started doing what we're doing, 5-10 years ago, and it would have really set himself up. I mean, he's living comfortable now. But yeah, I mean, Bo's going to see what we're doing, and I mean, he's already asking questions, what we're doing. So if we can set up a portfolio, I mean, having 5 properties, and then Bo seeing what we're doing, he's going to get that. He's going to get the gist of what we're doing and want to do it himself too. So we're basically setting up a foundation for a legacy for our family's future.
He's got a little bank account that we've opened that he can buy his first investment property with when he gets to like 20, 21-ish. Yeah. We've already started all that business. So yeah.
Love it. Love it. What are you guys most grateful for?
Oh, each other in our family.
Yeah, absolutely. Yeah, just the simple things in life, Goose. Like, where we live. I mean, Terrigal's it's a beautiful place, and you get kind of complacent quite a bit. But I mean, I'm also grateful for the hard times in life too. It's those testing hard times that build that gratitude and make you want to be more hungry and become successful.
Yeah. I'm just grateful for the time I get to spend with my family, my free time, and just grateful to be at home with these guys.
Yeah.
Any time when I'm not at work, really, I'm pretty grateful for it.
Love it, love it, love it. Awesome. So normally at the end of these episodes, I ask people a question about if everything you achieved all your goals and all of that kind of stuff, and then if you lost everything at the last minute, or at the moment that you passed away, what are 3 truths you want to live? I want to switch this up a little bit. I was actually thinking about this over the weekend, and I thought, here's an interesting concept. Imagine if you could have a billboard big enough for the entire world to see. So either maybe the billboard's floating in space, or maybe you get to like digitally have a billboard. It appears on everyone's computer, everyone's TV screen, everyone's phone, but you get to share a key message, or if you've got a couple of messages that you want to share with the world, you want everyone to be able to hear this message. And I kind of like the visual of like a big billboard floating in space that everyone in the world can see. It's quite a nice image. What message or messages would you put on that billboard?
Mine would be, the grass is greener where you water it.
Ooh.
Whether that be relationships, investments, friendships, whatever it might be, every single part of your life, the grass is greener where you water it.
I love that. Yeah. Where your attention goes, that's what grows, right? So that's right. I love that. So the grass is greener wherever you water it. Love that. Yeah. Any other messages?
I'd like to, basically make sure the people you love know you love them. Our son Bo, for example, all the time is always saying, "Mummy, Daddy, we love you so much." It's such a good feeling. So say it when you feel it, and
say it often.
Say it often, say it all the time. And it's something that I've learned from actually my son Bo and Jean as well, because I don't say it enough. But you got to.
You get too much love.
Yeah, it's awesome. I love that because, like, you're an Australian male. I'm an Australian male. Probably growing up, that wasn't like all of that. I remember personally, I was the first male in my family that I know that hugged another male. I think I hugged my dad or hugged my granddad, and they were so awkward about it. They were like oh, what is this? What is happening? Physical contact and connection. What the hell? But I'm a big advocate for. I love that message, Dan, because I'm a big advocate for it. I think people need to overtly express. I love that, and I think the more that people do it, the more people can connect on it and to share that feeling, and that's what ultimately makes the world go round. So I love that.
Yeah, exactly.
Awesome, guys. I've loved this chat. Is there anything else that I should have asked you that I didn't ask you, or is there anything else that you want to share with the listeners of the Investor Lab podcast or anything? You can say no. You can be like, no, we've said everything, dude. Just back off.
Next time we come to Bali, you have to invite us over for a glass of lemon.
For a glass of sparkling. No worries. A little glass of booch. No worries. Sounds good. Sounds good.
For me, Gus, be a big message. Be inspired by others, because successful people. I mean, surround yourself with a group of successful people, because if you're hanging around people that you know, that are doing the wrong thing or you know, getting up to no good. It's just, you know, if you hang around successful people, you're going to build, you know, you're going to build a roadmap where you want to get to.
You kind of become your environment.
Become your environment. Yeah,
sort of a deal.
Yeah, you're in that, you know, positive, motivational environment. And you're not. There's no negativity.
Yep, love it.
Yep, you'll get there.
Nice, love it, guys. Thanks so much for your time. I really enjoyed digging into this. Some really cool perspectives that you guys have not only got but have gained along this journey, and I've loved everything we've been able to kind of push and pull around on this episode. So I think it's going to be super valuable for other people as well, particularly to just kind of get some optics on people who are doing it right now and, you know, carving their own path. So really valuable. Loved spending some time with you guys, and I look forward to speaking to you again soon. Thanks.